Friday, folks. You think you have it bad. I'm going to show you somebody that just lost over $1 million in just the last week. Now, we know Terra Luna used to be one of the top 10 cryptocurrencies. Today is worth 0.00003 cents, but on May 10th, this thing was trading for around $15 a coin, roughly. And if we go onto Twitter here, you may know a guy by the name of KSI. Maybe you don't, popular YouTuber out there, but in total, I have bought about 100,000 Luna, sticking it in a wallet and gonna see what happens in a few years. Could be the best, worst trade of my life. I saw an opportunity and I had to take it. Clearly that was a really bad opportunity because 100,000 Luna on the day this guy posted this on May 10th was about $1.5 million. Today, that's probably about $1,000. So I'm just showing this to offer some solace because we're going to go into my over $360,000 dividend stock portfolio that I am trading down $30,000 on the year. And I thought it would be really great just to show you each one of my individual brokerage accounts and where we currently sit, guys. But taking a look at the markets first and foremost this week to see where we sit on this Friday, and it has been awesome. I don't want to say this is just a continued rally. We've hit the bottoms because so far, every time we get these hopium rallies, it's followed off by a wicked sell-off. But it is nice closing on a Friday being green, right? Bitcoin's back over 30,000. VOO's up 2.2%. The QQQs are up 3%. It's been a wonderful day. We've been getting a lot of earnings too, guys, from some of my favorite companies like Algonquin Power. It posted really good numbers, increased the dividend by 6 or 7%, and it's up 2% today. So that's pretty nice. But take a look at the speculative side of my watch list because ARK Innovation is now up 10%, guys. All of those really speculative companies seeing a lot of hope and a lot of green today. Ouster up 8%, Hyliion up 10%, Rocket Labs 8%, Virgin Galactic, these meme stocks up 10%. And I mean, let's see GME at the bottom here is up 13% today, over $100 again. So let's just framework where we currently sit this year with those mega caps, those S&P top 10 tech companies like Apple, which is now trading down from its all-time high of about 19.9%, Microsoft 24%, Amazon, guys. Where's Amazon? Amazon's been one of the most painful ones because it hasn't really done anything for the last 2 years, and then it drops 40%. Facebook, another painful one, down 48.5%. Google, 22%. Tesla, 37%. Nvidia, down 48%. And those dividend investors that have been just finally unjaded by this market saying, hey, we finally are doing better than the average market because the VYM, this dividend ETF, is only down 6.31%. And the VOO, guys, only down 16% against the insane volatility of these large caps. But it's always important to remind ourselves that, guys, these are short-term barriers that I promise you in 5 years, this is a blimp on the radar nobody cares about because this is like going back to 2018. People keep forgetting that from 2018 literally till about 2020, I mean, think about that. Over 2 years, the S&P 500 didn't return a single dime, and it dropped pretty rapidly, about 16%, very similar to what we're seeing now from 2018 to 2019. This is not a very uncommon market correction that we're experiencing here, and I think it's always important to look back in history and realize on the very long chart, none of this is really going to matter into the future here, folks. So on that note, let's talk about my individual accounts real quick, see where we sit. I'm going to zoom my head out so I can see, you guys can see the exact gains and losses, because many of you know I am shifting and have been shifting most of my capital over into the indexes to avoid further pain because I don't know what's going on in these markets. And it's been a great place of solitude. I mean, take a look at this. I'm down 5% on VOO. VYM, I'm only down 1.85%. So you can see about the time frame I was picking these up was just about a week ago here, a week or two ago. And taking a look from the Canadian perspective, we're not doing too terrible in the tax-free savings account because, again, we hold Algonquin Power in here, which I'm down on, but dividend increases are absolutely wonderful. And as mentioned, Algonquin Power posted a beat on revenue, guys, 3.68%, and did beat the EPS by about 0.1%. So it has just done exactly what we could expect it to do. Why it still continues to trade down so rapidly is probably just a good buying opportunity. But taking a look at my managed account here, guys, I am down on Smart Centers since I have bought it back. It is nice seeing Ryokan rally back a bit today, but I'm always having cash in this account. This is one of my favorite accounts because a lot of these, you know, my REITs are monthly payers. TELUS is great. TD has been great. So it's like every month I come in here, I always look and there's like always 100 or a couple $100. It's a really great feeling getting that dividend income, right? Taking a look at the RR to the S to the P, guys. Yes, I again pivoted Johnson & Johnson, Procter & Gamble, all those companies back into these indexes here. And again, this account, similar performance to the TFSA because I did it around the same time. So down 5% on VOO and about 1% on the VYM. Now from the corporate account, which I'm very excited, my corporate year has ended. I'm hoping to get my corporate taxes finalized very soon. Now, this account is up. I've shown you guys all of my accounts in the last portfolio review to show you how much from a percentage basis I'm down on each one of these accounts, and we are still doing wonderful. The overall portfolios combined are down about 8 or 9% from the all-time high, about $390,000 down to about 360, 365 where we sit today. But this corporate account on the 12-month return is up 3.13%, which kind of blew my mind because on all the positions I've taken on recently, I'm getting clobbered. And then considering this account started last May in the midst of those rallies, I'm really shocked that this account is still showing any signs of green, right? So we are down on the recent purchases of about 4,000, but again, on the 12-month, we're still up slightly. And it's kind of crazy because everything in here is absolutely getting clobbered. I'm down on BCE, RY, Enbridge, Algonquin Power, all of these down 5 to 6%, with a little painful. Well, Enbridge is flat, I guess. Enbridge is doing okay. And then again, since I kind of sold off all those tech companies in here to more or less focus on the index funds to simplify my life, we can see that I'm down 4.41% on VOO in this account, and I'm down about 4.91% on VYM. Now, what I'm looking forward to here most, folks, is finishing up this freaking earnings season, which honestly has been wonderful. I mean, we couldn't have really asked for a much better earnings season than what we're seeing here coming out of those mega cap companies. And now from the Canadian side of the border, we just got a few more things to finish up here. And that's going to be primarily Bank of Nova Scotia posting May 25th, the Royal Bank May 26th, Toronto Dominion Bank May 26th. And again, these banks have done really well through the pandemic, but now that we're heading into this kind of rockier period in the real estate market, which again, a lot of these banks are highly leveraged to mortgages and things like that. And even though interest rates are going up, it's like a double-edged sword, right? Because, you think the banks would make more money in a higher interest raising environment, but honestly, if less people take on loans, the real estate market cools down, you're going to start seeing a slowdown in how much volume and revenue that these companies are generating from a growth rate, right? So most of these banks are posting May 26th. That's coming up in the next couple of weeks. Something I'm going to be paying very close attention to here. But all in all, the portfolio, guys, making over $1,000 a month annually, 50% indexes, a very nice diversified spread of Canadian stocks from the telecom, utility, and banking and financial sector, very equally spread in those sectors, no more than making up 15 to 20% in any given sector. I've gotten a lot of solitude in my portfolio, and I've outperformed all of the major indices this year. I mean, it's kind of incredible, really. So I'm glad. I'm happy. I'm not really complaining, and I'm looking forward to continue to buy these dips. I want to talk more about the growth side of things because, I know people with smaller accounts in my personal family that are more growth oriented, more focused on the Qs, things like that. And I'm going to discuss more about that in the future because honestly, guys, this is the buying opportunity of a lifetime. Like I said, if I didn't have such a large amount of capital, I'd be much more aggressive on these growth plays like Shopify that are trading down massively. But because I don't need to be making those excessive growth rated returns anymore, because I'm happy making a 5 to 10% a return a year on my overall portfolio, because that's huge money. It's huge money on 360,000. So I'd rather consolidate, take some of the stress out, not deal with the insane volatility aspect of things. But honestly, if you're sitting on 10, 20, 30, 50, 100,000, I'd be way, way more aggressive. I mean, these deals are insane, guys. But I passed the question off to you. I'd love to know what you're buying in that comment section below. But stay cool, stay awesome. And as always, I look forward to catching you in the next one.